Hey, what's up, everyone? This is Sylvester, founder of FX Lifestyle, TradeYourFuture.com. In this video, we're going to be going over the Fibonacci retracement tool and how I personally use it to help give me an edge in my trades. So I'm going to go back to the Euro USD chart that we used for our support and resistance and the trend lines that we went over, since that's already marked out. Because we're going to be using the Fibonacci retracement tool, just like we use everything else, as you've learned already. It's going to be part of one of our confirmations in confluence with other ones. Mainly what we're going to be treating the Fibonacci ratios as will be support or resistance, in conjunction again with our other confirmations. So the first thing that we're going to do with our charts, as you can see, I have these nice vertical lines up on my chart. And the way you're going to put them on there is you're going to right click the chart anywhere on the screen. You're going to click settings, and then you're going to go to background, and then you're going to select vertical grid lines. It's going to be like a checkered box like your horizontal grid lines. And you're going to click on it and then just select the color you want it to be. Most likely you're going to just select black like myself, because that's makes it more neat. So you're going to select black. You can adjust the thickness if you like, or really actually the way they're going to appear, but solid lines are going to be the best. And then you're going to click OK. Now we're on a daily chart, and the way I use my Fibonacci retracement tool when I do my analysis, I mostly do swing trades. So my favorite chart is the daily and the 4-hour. And the way I do it is I draw out my daily and then I draw out my 4-hour Fibonacci tools. Now the way I draw my Fibonacci is not your conventional way, which I've shown in my previous video, where you take it from, let's say, this high here to this low at the bottom. That's the conventional way of using it. I do it where, actually in this case it just so happened to be this way, but what I basically do is on the daily, here, let me actually delete that. Let's do this. So grab a notepad, pen, you can write this down. The daily Fibonacci will be used to predict the next month price action. The 4-hour Fibonacci will be used to predict the next week, and sometimes that can be the next, like the next weeks. So that can be plural. And then the 1-hour we're going to be using to predict the next day. And so you could write that down for yourself, take a screenshot, so that way you know. The way it works is just to show you, since I'm on the daily. If you look down here, you zoom out, you zoom in to the point where you're going to see each following month. So you're going to have February, March, April, May, so on and so forth. And the way you're going to do it is you're going to grab your Fibonacci retracement tool up here. So you click on this little arrow and all these tools come up, and we're going to be looking at the Fibonacci retracement tool. So you're going to click Fibonacci retracement, and then you're going to look to draw these boxes. So this is where the month of May started, and so this is all of the month May's data. This is all of May's data right here, starting from this point all the way to this point until June started. And so you have your whole month of May. So we're going to be drawing our retracement tool for whatever happened in the month of May to predict what's going to happen in the month of June. So in this case, it just so happened to be that conventional way, but you can see we have a high up here. So we're going to draw it from the high to the low. So you're going to find your highest point and your lowest point, and you're going to draw it from either the highest to the lowest or from the lowest to the highest, depending on how the price action was. In the previous box, it just so happened that the lowest point was here and the highest point was right up here. So we're going to draw from the lowest to the highest and keep it into this month. On the 4-hour chart, as you can see, if you go down to the 4-hour, you're going to have it zoomed out to a point where you could see it's from the 7th to the 14th, from the 14th to the 21st. You can see each box is a week, and you're going to do the same thing there. And if you're going to use it on the 1-hour chart, you're going to do the same thing, where you're going to zoom out to where you can see it's all daily. The 4th to the 5th to the 6th to the 7th. You'll have these little gaps where this is basically the weekend. So this was like a Saturday and a Sunday in between, so you have like a 3-day, but you could see throughout the week you're going to have 10th to 11th, 12th, so on and so forth. So we're going to be drawing them within the box. It's going to help us predict the following week or month, depending on what kind of trader you're going to be. And I like to draw them out on my daily and then go down to the 4 hour and draw out the 4 hour, because if you've been following me, you've heard me mention fib clusters before. And this is basically where you'll notice at times where you draw out your daily fib and then you draw out your 4 hour fib. You'll see at times these ratios will line up with each other. And when they're lined up right with each other, it's going to suggest very strong support or resistance, depending how price is moving. And you're going to really watch for what price is going to do around these levels, whether it's going to actually respect them, whether it's going to break, retest, and bounce, or it's just going to go up to and resist. So that's what you're going to watch for. Now, the first thing I would do too, because when I heard of Fibonacci, I was never familiar with it. What you can actually do is we're going to open up a tab here, go to youtube.com. Go to youtube.com, go into the search bar. Internet's being a little slow. I got videos uploading. They're so big. But you're going to go right up to the search bar. You're going to type in Fibonacci. You're going to click enter. Just type in Fibonacci. And actually, this video right here, it's 30 minutes long, but it's crazy. So Fibonacci is actually a sequence of numbers that basically explains everything in life. It's going to explain how the computer you're staring at, the desk you're sitting at, the chair you're sitting at, your pants, the wall, the paper, everything around you in life can basically be broken down to this sequence of numbers. And the important sequence of numbers will be these ratios that we're going to have that are on your retracement tool, like the 61.8 is the golden ratio, the 38.2, 78.6, 88.6, so on and so forth. It's a never-ending sequence of numbers. The formula that's used, just the numbers will keep going. There's no, it's infinite. There's no stop to it. So watch the video. I'm not going to get into it. I'm not going to play it. Obviously, it's half-hour long. But watch the video. Get a good background of what Fibonacci is, where it came from. It's actually after an Italian mathematician, I believe, if I'm not mistaken, actually right here, Leonardo of Pisa, aka Fibonacci, that came up with this sequence of numbers, and it just so happened to actually explain everything around us in life. Basically like God's DNA is what some people call it. So it's pretty cool. Watch it, get a little background of it. And it's crazy to see how it's going to reflect in our trading and how price will actually respect these ratios. So let's get right into it. So we're going to take out our Fibonacci retracement tool. And by default, you're not going to have all these ratios. So let's just draw one out real quick randomly. We're going to right click it, click settings. And then right on the style, you're going to see these ratios. So you're going to check mark the ones we're going to be using. So some of these will be already check marked. So basically what I have check marked is a 0, the 0.382, the 0.5, the 0.618, the 1, 1.618, negative 0.27, negative 0.618, 0.886, which is I think one that you're going to have to add, as well as this one, and the 1.27, and the negative 1.618. I believe this one, actually all of the ones on this side that I have check marked, including this one, I think you're going to have to actually add in, but you could just type that right in and then just check mark it. And that's it. And you're just going to click OK. So I'm going to delete that real quick. So we're going to start from here and just going to go one by one. So basically what I'm going to do is so I'm going to draw this out as soon as this box ends. We're never going to draw this while we still have a box open. If we still have a box open, then we're going to have the previous one drawn. So we're going to assume this box is coming to a close. So I'm going to take my fib right from here, draw it down from that high to the low, and there's my fib drawn out. So we're going to use this box, this month's data, to predict the next month's data. So we have this drawn out. So as you can see, we already have some of our resistance and support zones drawn out from the previous video. So we're going to just use this as confluence. So you could see price actually went up, respected the 50. You could see how it went right above it, came down to retest, came above it, and it really respected the 61.8. At this point, your confluence is the rejection of 61.8, bearish engulfing, came right under the 50. We're in a resistance zone. That's another confirmation. Came down. This point here, we saw the 200 EMA respect. It formed like a neckline for a double top. Price went up. You could see literally how it respects this ratio. You see how it broke down? It came to retest 38.2, came back down, came up, retesting it, came down, up. It's literally the wicks are touching that ratio. Then it went above, then it went above, and it hit the 61.8. And this would have been a perfect confirmation. We have a double top formation off the 61.8. We have resistance off the 61.8. We're in a resistance zone, and the price just shot way down. Now, the negative 27 and the negative 61.8 will be our take profit levels, as well as the 1.27 and the 1.618. So let me write that down. So if you guys have a notepad, take some notes. Negative 0.27 plus negative 0.618. So actually, let me write that differently. Let me do negative 0.27 is take profit 1, and negative 0.618 is take profit 2, which are these two right here. Next thing that I'm going to write is 1.27 is take profit 1, and 1.618 is take profit 2. So write that down, take a screenshot, take a picture with your phone, something like that, and just remember that. Now I have the 50 actually in red, which if you want to know how to do that, you go back into settings. You can see that I have a 50 here and I have it in a red color. Click OK. And I have it in the red color because, as you know, there's a triple kill confirmation, the 50 EMA, the 50 RSI, the 50 Fib. The 50 I really watch for, because you will see at times the 50 Fib will line up with the 50 EMA, and at the same time you have the 50 RSI bouncing or rejecting, and that's just extra confirmation. So back to this, price came down. You could see it literally came right down to our negative 27, which was a previous support zone here. So let me draw that out. Came right down to our support zone, which was right with negative 27. We saw price jump right off of it. So this was our first take profit. We saw price kind of jump around here with this little resistance. Came up, came down. At this point, let's move on to the next one. So in this case, this is actually a rare instance, but you can see it's just one candle. That's actually our highest and our lowest. That rarely happens, but it can. So you can see right here, price came up, it's respecting the 50, it came down, came up to the 50 again from the little double top. So this could have been a small entry, but it came right down to the support zone, which is again still the negative 27 that we had here previously. And what I do sometimes, this box doesn't just always just predict the next one. It could actually still go with the following. So you can see here it's still respecting the negative 27. In our support zone, we have divergence, we have a lower low, we have what you would call a slight double bottom. We made a double top as the neckline, double bottom with divergence. Made a double bottom here, and bullish engulfing, and you enter off the first take profit, negative 27, and you could go and you could see it went up, and you could see how it's respecting these ratios. And now it went up to the 50, came above it, hit the 61.8, came down to the 38.2, which was your support zone again. And then you see price go up. So you could see how price literally respects these ratios. Then we're just going to draw the next one. So we actually have a low here and then a high there. So you can see in this box here, our highest was right here, and they'll get really close to each other. You can see the wick here. That's why the crosshair really helps you. You could put it right on top of this wick and see how that line goes, and then see like right here it's still a little bit higher, and then this was the lowest. So we're actually going to take it from the low to the high this time. Let me take this one out just so it's a little bit clearer to see. So now you can see price actually here bounced off the 50, which was right near the 50 RSI, off a support zone. We have a bullish engulfing candle, went up, price went up, bounced off the 50, went up again. So you can see how it's literally respecting these levels, and it's coming right up to them. You can see price went up, hit our first take profit, hit our second take profit, right at this resisting trend line, which we wouldn't have really known of just yet, but we're in a resistance zone and we're at the second take profit. So we're closing out here, and we could actually start looking for shorts possibly. So So there's that one. Then we're going to draw our next one. So our next one's going to be from this low to this high. So we saw price came down. See, it's kind of jumping right on that 61.8, and the 50 respected that. You could see actually this little double bottom neckline literally formed right at the 50, just like I always mentioned it would. So it went up. It's rejecting 38.2. In this case here, what we will see is now we will see this resisting trend line develop. We're going to see we're in a resistance zone. We're going to see price made a double top here. We see we have some slight divergence. We see a rejection of 38.2. So when the 38.2 lined up with our resistance zone and we see price rejecting it, we will most likely see price come down. We're going to be watching for shorts. Now here we saw it break through the 50 along with the RSI, retested the 50 fib, the 50 EMA. RSI is now at this point broken under 50. Doesn't necessarily have to come and retest it on the RSI. Bearish engulfing candle, we entered right here and we go right down to take profit 1, 1.27, and take profit 2, 1.618. And literally look at that, and that's from this box. So you could see it's not just going to predict necessarily just this one, but it can predict this one. And you could see within here how price is going right up to the 38.2. It's literally respecting that zone, testing it, bouncing straight from here to this one, then respecting it, and see how it's just bouncing from here. So right here I would have saw that price is literally at a resistance and just really struggling to break that. And it's in between these ratios, and at this point I'm just waiting for that confirmation, and this one really would have been that confirmation with that bearish engulfing, the RSI finally crossing nicely under the 50 RSI level, and off the resistance under the 50 EMA, under 200, just really bouncing off of it, all three of those at the same time. And that's a perfect entry right there. And right off the jump there, you just call 500, 600 pips easily right on the daily chart. And you could see the first take profit lined up with our previous support zone at the 1.27, and price actually went all the way down to 1.618 second take profit at the second support zone right here, which we would have had drawn out from the left. Look at that, it just perfectly aligns with it. And that was even from this one drawn out here. So you will see me have these drawn out both sometimes because you really don't know how far price is actually going to be respecting these levels. So I would have had these two drawn out, but as I see this one still being in effect, these Fibonacci ratios, how price is still respecting them, I'm going to keep this one open. So now I'm going to just take this one out so you can just make it more clean and easier for you guys to see. So now I have drawn this one out. I would have kept the other one. So in this case, I'm going to grab my fib tool. Now I'm going to draw it from this one here. So we have the high right up here, and then we have the lowest point right here. So boom. So we have that drawn out. So now we see price came up here, formed a little double top on the RSI right around the 50 level. Price respected the 50 EMA, so it respected 50 and the 50 fib, broke right underneath it here. This is an entry point right here for you with all three aligned, and price just goes straight down under. And now you're in a support zone, here, and you can see price just went way down. And there's our first take profit, the negative 27, and our second take profit, negative 61.8. And you can see price literally went right down to this point here. So you can really see how powerful this tool is, and if you follow it, it just adds extra confluence, and that's what it's all about, is actually the confluence. So you're always going to be looking for multiple confirmations. Now the next one I'm going to draw is from this point here to this low here. So we have a high here and a low here. At this point, what we're seeing here is like a little nice double bottom happening, even though, keep in mind, like I always mention, the double tops are like your letter M and your double bottoms are like your letter W. They're not always going to just happen where the support is right perfect. They're going to be just like this sometimes. But see, at this point here, so we have like this W shape form. We could be looking for price to bounce off of here. But at the same time, we see bullish divergence. We see price is making, got 1, 2, 3. It's just really respecting the zone. You see we had a support zone right there, and then price went up off of just a bullish divergence. But that wouldn't necessarily be just an entry for me off of just bullish divergence. But let me just see something here real quick. Let me see if I kept this one open. Actually, did we draw it? I think we drew it from here to here. Yeah, in this case, I mean, you have this really long wick here, but I wouldn't have necessarily used that just because the price was actually like just way overbought here. This was like more market news, overbought. But we draw it from here and we find that price went right down to our negative 27, which is our first take profit right at this point here. We see a nice triple bottom forming here. We have bullish divergence. So that right there is confirmation that we could go up, and we could go for like candlestick pattern here, bullish engulfing, something like that. This personally wouldn't be enough for me just to go off of those, because looking to the left, I don't really see this as a support zone other than just a negative 27, which is a first take profit. But I don't see any support zone from here to the left. So really, I'll just be watching what price does here. But you can see price just went up. You can see right here, respected the 38.2, came right down, respecting the 61.8, respecting the 38.2, respecting the 50 fibs. So you could see it literally bounces up and down from these ratios. So we have that one drawn out. So we have this one here. You can see how price is literally just respecting these fibs right here. So take this tool, guys, back test, look at your charts, see how price literally respects these ratios, and they're going to be a huge, huge help in your trading. It's really going to kind of help you see like just why price is going up and down on certain levels between all these other confirmations that we're already learning about to now adding this to your toolbox. You could really just help you see how price is going. So now we're going to draw it from this low to this high. So now we see price come down. It's respecting the 50. It's going up 38.2, came back down right to the 61.8. So you can see it's literally bouncing up and down from here. Now right here, you would have noticed that we have a left shoulder ahead, a right shoulder. It's forming what possibly could be the trend line. It's in a support zone. The right shoulder literally bounced off the 61.8, so you're finding some type of support here. You can see the RSI is finding some support here. It's not breaking down under, so you can signal a reversal. And as soon as it broke through that neckline and it retested it right off the 50 fib. The RSI is retesting the 50 level, and it just shot up right there, and then boom, first take profit, negative 27. Literally came right up to it. So you can see it's just, I mean, I can't make this stuff up. It's literally respecting these levels, and you're probably kind of shocked right now on how much it really is respecting these levels. And as you're just drawing them out, and all we're doing is predicting this month's data to predict what we're using is actually this month's data to predict the next month's data. So it's really, really powerful. I see price came back down to this point. Now we have a trend line. We have a double bottom that formed right here. The RSI is over the 50 level. You could see price broke right back up under the 61.8, and it's just respecting these fib levels right here. And this right here, you have a support zone, you have a double bottom, you have a bullish engulfing. You could see price even came down to retest this neckline here with this wick. It's respecting the 50 fib, the 50 EMA. So that's multiple confirmations. You enter here and look at that. Your first take profit, negative 27. Second take profit, negative 61.8. And you just have multiple. You could have even added more entries here as you saw this resistance being broken. That is now support. Price came down to it. You are breaking this resisting trend line. You saw price did a 1, 2, 3 triple bottom right here, bullish engulfing. You could have even added more. And negative 27, negative 61.8, your two take profit levels. So you can see it's very, very powerful. You just have to back test and practice and be able to start seeing this for yourself and just see how price is respecting these levels. Right here, if you draw from this low to this high, now you have a combination of market pattern, bullish flag, a trend line, possible bounce. You see it come out, retest the bullish flag, and you see price respecting 38.2 as support. And then boom, first take profit, negative 27, second take profit, 61.8. And then you even go as far as this one here. Now this is another take profit, but you're not really going to see it so much because it's really kind of out there. And like a very strong trend, it will reach that point. But we really just focus on these two here. I just like to have this up there sometimes. Now we're going to take that out. and then just draw our next one, which will be from this point to this point. All right, now here's that fib cluster that can happen even on the same time frame, or like I mentioned before, from when you draw your daily and then your 4 hour. And you can see right here the negative 61.8 literally lined up with the negative 27. So this was acting as a pretty strong resistance zone. So you can see price stalled out right here, but then it just broke right through it. And in this case, so if you didn't have that trade open before, you saw price break through this resistance, come down. 38.2 acted as support. We had it come up, retest it again. So you have a double bottom happening. You see like the nice little W. Double bottom off the negative 27, support zone. Price respecting this 38.2. First take profit, negative 27. Second take profit, 61.8. And even as far as negative 1618, which lined up right here, and price found that resistance zone, which was actually enough to form a head and shoulders pattern here and for price to just break right through and retrace down. So really powerful stuff, guys. Go back test this. This works on any currency pair, whether you're doing 4 hour, 1 hour, daily. Now I do mostly swing trades, so I draw this out on the daily and then the 4 hour, and use those two together. But if you're, let's say, a day trader, let's say you just trade the 4 hour or just the daily like we just did here, you don't have to do that. You can literally just use it on that time frame. Just do it where you follow this protocol here and you know how you're working with it. So that way your 1 hour chart shows you your daily, your 4 hours your weekly, and then your dailies your monthly. And then these are your take profit levels. And use these in conjunction with your other confirmations. You don't want to use them just solely by themselves, because otherwise you're just not gonna, it's not gonna give you as much probability of a winning trade when you're just using the fibs. You want to use these fibs in conjunction with the other confirmations like support, resistance, market patterns, candlestick confirmations, 50 EMA, divergence, the 200 EMA. Use them all in conjunction, your trend lines, and then you'll see these ratios line up with them, and it's just going to give you that extra confirmation, which is what all this is about. It's confluence trading. It's having as much confirmations as possible, at least 3, to enter in the market, and have a higher outcome of having a winning trade. So I hope you guys learned something new. If you have any questions, there's 24/7 support. You can email me. In the group chat, you can ask questions. I'm going to be doing more of these videos as I release my course, because I'm sure there's going to be a lot of questions that are going to come out that I won't be able to answer in every single one of these videos. So feel free to ask them. I'll be making more and more videos. That one-time fee is not just for this. There's going to be a one-time fee, and you're going to be part of the group for life. You're going to be part of the signals that I will call out occasionally, for other than just the paid signals group. There's going to be webinars I'm going to try to do once a week, and I'll keep making more of these videos as I learn from you guys what you want me to touch base on more, or help you, or help me explain to you in more detail what you might have questions about or struggling with. So feel free to contact me. I hope you guys enjoyed it. I'll see you guys in the next video. Peace.